All right, good morning, everybody. So it's time for the channel member and Patreon live stream. We're gonna talk about a few things today. We got Bitcoin coming off a little bit, hit that weekly heat level. That is a very important price. This is daily support down here. Let me go show you. Daily support. That's what you're coming into right now. So let me get over here. Good morning, guys. Good morning. Good morning. So yeah, excuse me. I'm sorry to do that right in the microphone. Daily support. That's what Bitcoin is trading at. That's why you're getting a bounce. All right. So this little bounce here, I don't know what's causing all this going on. But I did take a short on this yesterday when it traded up into that. I was short from over here as well. Took profits when we took out my target down there. My stop to break even. This took me out, but as I was watching price trade at this level and knowing that it's a very important level, I also took another short scalp there. That position yesterday, when we closed this hourly candle above this wick, I exited 75% of the position and moved my stop to break even, and then you dropped like directly after I did that. So I'm still in it, but I'm not in it with the original position size, which sucks because obviously that big move down into daily support would have been fantastic to capture that. The position was up about 7% when I did do that, so it's all in well. And I am trading the inverse swap contract of the Bitcoin with Bitcoin. So basically every trade I take, whether I win or lose, I am being paid in Bitcoin. So I'm just using Bitcoin to accumulate more Bitcoin. So ultimately I am long Bitcoin longer term. I want to have as much of it as I possibly can. And this is just a way to scalp intraday, taking on these moves and making a little bit extra Bitcoin. I have plenty enough other cash accounts to make US dollar cash. So I just found out about it last weekend, so I'm playing with it, see how it goes. So far I love it. Now, I put out yesterday's video basically showing you the bullish case for Bitcoin. We're showing everybody the bullish case for Bitcoin in my view, right? I'm more of a technical analyst than I am a fundamental guy. I do like to know what the fundamentals are currently happening in the nation and other nations abroad, just basically to kind of help. It does kind of help me, or to persuade my bias, so to speak, like with the interest rates hike and everything else. Now, something is unfolding in China. I didn't mention it yesterday. I was aware of it, but the reason I didn't mention it, and that's that Evergrande company over in China, they have defaulted on over $300 worth of debt. I have taken several notes on the topic and decided that I would get ahead of it if it turns out to be a story. And the story is, how is Evergrande linked to Twitter? Tether. So we know that Tether, here, let me just do this real quick. Just bear with me. All right. This is important because you're going to start to hear about this coming up more and more on YouTube channels. People are going to be using this as a clickbait generator, right? They need views. YouTubers, they want views. They need views. So they're going to be putting Evergrande in thumbnails and equaling with Twitter and all this other stuff. But you're going to hear it here first. This is Tether, right? This is CoinMarketCap. This is what they say Tether has. $68.3 billion market cap. Now, just 2 months ago, this was $62 billion. So it has grown $6 billion in a couple of months. This fully diluted market cap, this is their total supply. All right, that's total supply. And this is circulating supply. So this market cap here is the same number almost as circulating supply. So this just means that they have more Tether to issue, so to speak. That number, $71.3 billion. Now, they don't show us their books, their balance sheets. The US government has asked for them, and Tether refuses, flat out refuses to do it. Why? What are you hiding? Well, we don't know. Now, there was conjecture, and that's all it is, guys, is conjecture and speculation that Tether might hold some of this company's debt, because Tether does hold $30.6 or $30.8 billion of these debt obligations, or, you know, whatever you want to call it, commercial paper is the buzzword going around. It's debt. It's the same thing as the mortgage-backed securities back in '08 that caused the financial collapse in the United States of America. Well, China's about to go through the same exact thing. These guys absolutely was fraud, just like Bernie Madoff and Lehman Brothers and all that other stuff. That's exactly what's going on in China right now. And the allegation or the speculation is that what if Tether's $30 billion worth of debt is from this company? Would that indeed cause Tether to crash? My answer would be absolutely. $30 billion. If their market cap is $68 billion, then that means half of their market cap is in debt. Half. So, yes, market would absolutely be that would be fatal for Tether. I have been digging all morning since 6 o'clock in the morning. I've been digging all over the internet, looking everywhere to see if there's anything else. And there's not. This is it right here. The stablecoin issuer Tether this week declared that it does not hold short-term debt issued by troubled Chinese real estate developer Evergrande. Since Tether doesn't disclose specifics about the commercial paper that substantially backs its stablecoin, this is a bit like serving a house guest a sandwich and loudly assuring them that it's absolutely not made from a deceased horse meat. What the fuck? I didn't read this article. Here, let me go over here to this one. Because this one basically it says what it is. It's basically they're just puking out the words that Tether spokesman has already said. It does not hold commercial paper issued by that bank or by that company, Evergrande, or Intergrande, whatever it is. I thought it was Ever. Oh, it is. That's a typo. It's Evergrande. So basically, so it doesn't hold it, and that's what they said. You know what I mean? And that's it. That's all that's been discussed, and that's all that any of these articles say. They just basically repuke out the same thing that's already been said, and it's clickbait. Then they go on to talk about the company itself, Evergrande, and it's nothing in here that's about Tether. The only thing that's about Tether is right here, and the only thing that I can find on the internet says that Tether doesn't own it. They say they don't own it. Is it possible or likely that they do own some? Yes, because this debt that this company owns is spread out amongst about 50 different companies and different names and stuff like that. So it is absolutely 100% possible that Tether owns some of this company's debt. How much exactly? Well, we don't know, and neither does Tether, or they're not saying. So there's really no reason to be worried so much about this and Tether. Now, there is cause for concern here because what's going on in China can absolutely reach us over here in America. Let me pull this up real quick. Give me 1 second. Just basically so I can show you what I'm talking about here. All right, so it's in Evergrande. Yeah, I'm just going to pull up the notes that I've been... Oh, God. Just give me a second. There we go. So here are the notes that I've been compiling just to make if I was going to make a video on this topic, but I have not found anything to make one. Right now, it would just be speculation and clickbait. But here are the bag holders for Evergrande. This was important, I thought. BlackRock Incorporated, the #1 bag holder. HSBC, Ashmore Group, UBS, Royal Bank of Canada, government pensions, multiple portfolios there, Prudential, T-Mask. I don't know any of these guys, but look who's number 14, Goldman Sachs. So yeah, this can affect America. Absolutely it can, guys. It's going to affect China unless China prints a bunch of money and bails them out like we did back in '08, which is probably what they're going to have to do. It can absolutely cause a catastrophe in our markets over here. It absolutely can. But if you follow my channel, then you know that, hey, it's good to know those things. Absolutely, it's good to know them. Keep them in the back of your head, but don't let them make don't let them hinder your bias, or don't let them, move it, so to speak. Just understand that it's out there and it is a threat. So we trade by what price does. That's what we do here. We don't care about FUD because we are firm believers that price is going to tell us what's on the horizon and what's not. So from the beginning, we've been watching this decline. The 618 retracement level up there gave us a weekly close above and faked us all out. There is the sellers right there. They are sitting at this area. We know that. So far, all we've done is found a bottom and traded up a little bit and ran into another area of resistance. Now, this other area of resistance, I pointed out last week's video and yesterday's video, you got a weekly supply zone right there, right? Let's get it on there the right way. That's not the right price. Well, I guess it is. Maybe I was looking at it on another exchange. It was 48.08 or something like that, 48.808. But anyways, that's the candle. And then on the 2 week, you've got 2 week resistance here and also this 2 week supply zone. So that's what's holding price. Now, this is an engulfing candle. This bearish candle, it is an engulfing because it did take out the high and the low of the previous candle, but it's not extreme. It's not nothing to be concerned about because you did not close below the low. If you would have closed down here, then we would be talking completely different. So right now, as we set, Bitcoin's pulling back up to that level, which we were expecting it. Because last week's video said we can trade all the way back up to that. And when we get there, that's going to determine the direction for the next week or so. So far, you are seeing a pullback. So this was a slight pullback these 2 days here. You just pulled back inside of this daily candle's range here, this one, right? Held above the open of this candle. That's good on this close. That smells pullback. Very next day, what did price say? Oh, we're going higher. We're taking out these stops up here, right? And we're closing above daily resistance, which is here. This is good. It's more good than it is bad. Now today, what have you done? You've pulled back into daily support. Is it a buying opportunity? It's possible, but you have a massive level right above you. So I don't necessarily like taking longs in front of that unless I am specifically going to take profits before it gets there. So if you want to do that, is it probable? Is it going to happen? I don't know. But there's your daily support, all right? So watch this level on an hourly closing basis. If you get an hourly closure below this hourly candle's close, then I would probably leave it alone. All right. But that's a decision that you have to make. I cannot tell you if that's a good trade or not. It's not one that I would take. Not right now. Simply because we don't know if this is going to be just a pullback or not. So it depends on where we close today. And today is also going to be the weekly close. So that's going to be important as well. Closing green is going to be good. We will see if the bulls are able to step back up. With all the massive threats looming out there, right? Will it? I don't know. We do have a Fed FOMC coming up on the 22nd of this month. They will tell us if they're going to hike rates or not. If they're not going to hike rates, then you're good for another quarter, right? You're good for the fourth quarter. Chances are you're going to see the dollar fall. S&P 500 will rally. Bitcoin will grab some strength and take off. If the Fed decides that they are going to hike rates, this thing is going to fall just like the S&P 500 and every other risk-on asset. The Aussie dollar, the New Zealand dollar, those are going to be two great things to look for shorts, so on and so forth. Any one of these are going to be good things to look for shorts, especially the higher flyers. Kusama up on highs, Atom at highs. This right here, people are speculating that this thing could go to $100. Like even at $30, it's very much undervalued. But it looks like people are buying it, right? I want a deeper correction. I wanted to pull back down to $29, and I was going to buy some because the way I look at it is if there is a chance of it trading up to $100 at $29, it's a pretty good buy, right? It's almost a 75% increase Well, I mean, you know what I'm saying. It's to 100, you got multiple X's there. You could do 2, 3, 4X on that position. So I was going to buy some with an amount of money, obviously, that I didn't care to lose, and I wasn't going to put a stop loss on it. But it's continuing to run. So your question would be, well, then why not just buy it here if you're not going to put a stop loss? Well, because down here it's cheaper. It makes the X's bigger if it does go. This is the thing. If Bitcoin crashes, so will this. Most of these assets will crumble with Bitcoin crumbling because so much is tied up into Bitcoin. Tether owns most of the liquidity in Bitcoin. So also it owns most of the liquidity in all these other cryptos. This is why they trade so similar. So much of the liquidity is from one place. And then the next biggest liquidity is probably, you know what I'm saying, so on and so forth. So that's why they generally trade similar to one another. If that liquidity comes out of these assets from Tether or anything else, you're going to see most of them fall. They will be outliers, of course. Some of them might not even be hindered at all by the crash. Not crash, pullback. We can't say it's a crash until we get below the yearly open, right? Because we've already put that in. We've already traded away. So as of right now, that technically is the low down here. And that's around the yearly open. So if we start taking out support levels and start trading back down, there is a pretty good chance that you could say that the top is in on Bitcoin. All right. This is what we've been looking for on this channel for the longest period of time. We needed to get above that. Once you start getting above this, then your resistance levels will be here, and then you're just a shot in the dark away from the all-time highs again, and that absolutely would cause FOMO. Bitcoin's going back to all-time highs. Bitcoin's going to $100,000. We're going to rock and roll. So that would cause FOMO, and you would see higher prices. But we got to get above this level here first now. It's very important. Very important. And this looks good. Consolidating under a level is okay, right? We haven't seen any massive selling coming in yet. This is what you're going to be looking for. If you see another 20% decline from this area or a little higher, then I will probably be looking for shorts from here on out on Bitcoin. That's just my opinion though, right? There's just too much stuff out there that could hinder this thing. You got the Fed getting ready to, they're coming back in, they're going to talk about interest rates, and then you got this $3.5 trillion spending bill. People just spending money like they don't even know how it works. You can't afford a $3.5 trillion bill right now, but whatever. That's going to affect crypto as well. And we won't know everything that they have in that bill until the bill is finalized and made public. Then you're going to see a bunch of lawyers and a bunch of people diving through that bill, tearing it apart line by line, seeing if there's going to be an effect on crypto. So we just have to wait. And that could be why price is also waiting. We will know more. The Hill speculates that probably by October the 3rd, we will have a bill. All right. And we'll have a final copy of the bill, and we'll know more by then. So just keep your eyes open and be careful, guys, right? Be very careful with don't be buying with more money than you can afford to lose. It's that simple. So that was the main thing that I wanted to talk about. Like I said, there's not much to talk about as far as that Avalanche company or whatever, Evergrande, whatever it is. There's nothing there. Nothing yet. If it does start to cause a crash in China, which that company's already lost 90% of its value, but if it does start to basically affect the US, you'll see it in the charts. You will always see it in the charts first. So we'll keep our eyes open. Right now, most of the cryptos are suffering. ADA USD, this is, remember this right here? Here, let me go show you. Had you taken that position, man, you were solid. Here it was right there. Traded right up in the 3-day heat level. Boom. And you have done nothing but trade away from it ever since. Fantastic entry. I did not take this position, right? I was focused on another asset this day. So once it was already back down in the 265 areas, I was like, well, the trade was up here, not down here. So I let it go. DOT was in a tradable area yesterday. I haven't looked at it. I've been very busy making yesterday's video. I was super busy with that all day yesterday and this morning doing all that for the Evergrande stuff. Here was the level I was watching on DOT. Yeah, traded right up to it yesterday. Looks like that you did get a slight decline from that level, but like I said, it doesn't look terrible, right? There's that level. Traded above it a little bit on the hourly time frame, but once this was put in, boom, you knew you were on the right side of the trade. And you simply could have just watched this hourly Heath level. So the way that you guys want to do this, if you want to take trades, right, we know that the daily level is here at 34.87. We know that's a daily supply zone. There. Here. This bullish candle. That's what makes it the supply zone. Because once you put in this bullish day, you traded back below it. That makes supply up here. So any trade back into the area, that's where we're looking for shorts. But you don't just blindly short it. You don't just throw a limit sell out there. You got to watch how price reacts around the level on a smaller time frame, such as the hourly. This candle closing above that level would have told you to wait. Wait, right? Just wait. You got an hourly closure above. If that level was going to be the short, the hourly would have traded up into it, touched the level like we've seen so many times before, and then decline, right? Would have then traded back up and made a lower high, probably into an hourly Heath level at that point, then trade away. But you didn't. So this told you to wait it out. Trade it down, 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 boom, another big bullish move. So had you taken a short here, chances are you were stopped out here. This is why waiting for price to tell you is so crucial and vital. Now, you still keep an eye on the level, the daily, because now price is showing you, wait a minute here, what's going on? So now you can watch this Heath level, the hourly. Here you got to close above, so you would have still been a little bit skeptical. Here, here, and here would have been the area to enter, right? We know this in hindsight, but I'm just practice, right? Do it on the bar replay. Do it on the bar replay. And if you're doing Forex, make sure you only look for these entries at the around the New York Open, 7 to 8, 9, 10 at the latest. You're not looking for an entry at 2 o'clock in the day in FX, because at that point, the trade has already happened. I haven't really noticed that to be the case in cryptos, right? I've been looking, and it seems like these things can move literally at any time. So I just watch the levels and see how price trades around them. But there you would have got a nice little trade out of that just by watching that daily Heath level. Now, daily support is here, right? Boom. And you can see with the wick down to it, it's good to go. You're not looking to, you're waiting, because it was an absolute flawless test of it. You get an hourly close above this candle, then you can watch for pullbacks into this candle. So a close above here, bullish, this, right? Here, sorry. You were looking for bullish closes above 34.13 on an hourly basis. Then you can watch pullbacks down to as low as this area here. If price is going to make another leg to the upside and come back into old hourly support around 34.59, you will find support before you make a lower low. If this rejects price here and now, and you take out this candle's low with a close, then price is more than likely going to be going lower. And then you will look on the daily for where that could possibly be. And there's really nothing. There's a daily level all the way down back to 29 bucks. So I don't just think if we lose this daily support, we're going to come all the way back down to here. No, because there's probably 8-hour and 4-hour levels that you're going to have to chew through first. And here's an 8-hour level. So beautiful. This would be my next target if you do indeed lose this one. 33 bucks, 33.02. If you lose that on a closure, you're probably good to trade down to $31.56. And that's how I dissect the markets every single day. I just look at price. What's going on, everybody? With all that said, what's going on with gold? Let's go look at it. Let's not use gold. Let's use XAU. I like the XAU chart better. I mean, I'm pretty sure they're exactly the same. All right, so we were looking for a decline in gold because it's in a bear market, right? You can see here that was your trade on gold. Didn't test it perfectly, so you would not have got a touch of the level, but let's do it like this. So that's going pretty back far. Just bear with me. If that's your level you're watching here, right? That's your Heath level. Let's see how price plays this out. That bar replay tool is worth its weight in gold. So you have stops sitting above this, or was this already it? No, the next day is when it goes up. So there's stops sitting right above this. Boom, there it is. My computer's slowing down. Very, very much so. Now, this is what I want you to see. We know that there's stops above this. We also know that there's stops above below this, right? This is why price puts in these hourly ranges to screw everybody. Now we're waiting for the daily. There it is. That's what you were wanting to see get exercised before you get that lower move on price. Now, what time did this happen? That's at 7 o'clock in the morning, right? Big, strong move. What'd you do? You took out these stops there. Boom. Straight back up into the daily level where we were looking for shorts. So yes, this would have looked terrible. In fact, you probably would not have been looking to go short this with that much bullish momentum. Or if you would have asked me during a day session in the Discord, I would have been like, bro, you got a lot of momentum on the hourly. So just, yeah, if you start making lower highs and lower lows, then possibly you could look for shorts. As long as you're not closing above the 1809's 56 level, you're probably golden. And then we know what happened, right? Because we have the benefit of hindsight. There you go. Never did close above your hourly resistance here, but you did make lower closes to the downside. So this would have been a good entry there. And then there you go. Boom. So there's your trade. That's what we're looking for. We're looking for these kind of moves. These kind of moves. This is what you see me constantly nailing, these awesome trades. One after another. Putting them out there like I'm some kind of... It's got nothing to do with anything other than I practiced and watched this bar replay for so many hours. Right, so many hours. Here's my entry short on Euro USD. Traded up. Boom. Down. Nice. The pound trade was even better the day before. That one's up here, right? Hourly res. Did take it out a little bit. Trades away. Boom. Entry. What time is this? 7 o'clock in the morning. Straight down. I took this based on bigger term, like higher time frame markets, our dailies, weeklies. Also, just thought it was going to go lower. Entry, boom, 3 hours straight down. Traded up during the Asian session and then early into the London session. Put in this stuff and then here again. What time is it? 8 o'clock in the morning. Entry, where is it? Right there. That's your hourly Heath level. This is your time window, 7 to 10. This is your level. Boom, straight down. It's not just me that does this, guys. That's why it works. That's why it continues to do so, because I'm thinking like they are thinking. This stuff right here would keep people worried. That doesn't me, because I see the broader move of the market. I'm not looking for entries at any time except for this. And I am looking for those entries at specific levels that the chart has shown me. That is a very small supply zone. And it just turned out to be the best entry on the second day. I did not take this entry. I took the Euro USD entry, right? But you could have taken that as well. But I'm still in it. I'm still in this trade, and I'm still in that trade. Profits were taken on both positions. Stops are at break even on both, just in case we do get a daily push higher, right? And then the Bitcoin, once again, the short term short. Oh, I'm on the right one. Is there. This level here. That's that daily Heath level. So I'm short like at, I can't even remember where I was. It's close. It's in this area here, real close to this area. And my stop is above that wick high right there. And it's not a full size position anymore, thanks to this little move here. Thanks to that. I should have just held it. But coulda, shoulda, woulda. Doesn't matter in trading. So gold, sorry, I got sidetracked. My bad. XAUUSD. But that's what we were looking for on gold. That's why I got sidetracked. So moving on, what are we looking for in gold? Well, this is what we know. We know that there are sellers up here at the $1,809 area. That was a beautiful short to the downside. You have dollar strength coming on the next few days. Let it trade up, right? I don't know that it will trade up, but I do know you can't take a short right now, not down here. If you are looking for shorts, you're looking for 1779, and you don't want to see a daily close above that. Remember, you can go into smaller time frame charts and watch like the 4 hour. If you're looking at a daily level, make sure you're not closing 4 hours above it, because those 4 hour closures are big. You only get 2 of them in the day, like in the day trade. You get 4 for the entire 24-hour period. Wait. No, you get 6. Sorry, you get a candle every 9, 1, and 5. 9, 1, and 5. 9, 1, and 5. So you get 6 4-hour candles each 24-hour period. But if you get a 4-hour closure above a daily level, that's a pretty good indication you're not looking to short that. So you can watch 1779 spot 93, see if you get a 4-hour closure above that level. It's not a Heath level, it's an old support zone. That's all it is. It's this bearish candle's close. That was support. You can see that it held price here, here, here. This was, as we know now, a fake out bullish engulfing daily. People would have been looking to go long this, but we weren't, because this right here, this shows us everything. If you were bullish, you wouldn't have done this. You would have made a lower close and then expanded to the upside. So as long as you're making moves like this, you're looking for another one. You're looking for another push up into an old support level somewhere. This will be the first one. Daily Heath levels all the way back up there. If you get back up to 1793 in the next couple days, I would suggest you not short that. Simply because this should never come back up to there. It should never get back up there. If it's going to continue lower, there is a massive support down here, 1729. So, yeah, it does look like it's going to go lower. Here are your technicals. Obviously, momentum is to the downside. Let's go check out how our this setting. It looks good for shorts. Right? It's situated perfectly. Now, it has been situated like this for a long time. Here, then you got a down move. Then you trade it all the way back above that nonsense. I don't use moving averages to take trades. I just use moving averages to show me the momentum of the market. Right now, you do see your faster moving averages, your 20, your 50, your 100. They're starting to do what? Curve down. That doesn't mean that it'll continue to go down. But what I would want to watch is a pushback up into an old support level of price support that's made by price, not by moving average, and then see if you get close to the 50. That's going to be a good opportunity to possibly look for shorts. Right? So look for this to trade back up. Look for price to trade back up. This follows price. So look for it to trade back up. And those are where your entries are going to be if it's going to remain going lower. So it looks like it's going to go lower. The technicals scream lower to me. And it does like that on a lot of things. Let's go look at the DXY real quick, just because I'm on a good rant. Here is a monthly resistance level. That monthly closes in a couple, like, what was it, 11 days? Big area. You can see you tested it last 2 months ago, last month, and again this month. This is my bullish target here. The reason is because there's a bunch of stops over that. Now, here's the thing. You do have a monthly supply zone right above that wick. In fact, the argument could be made that's why you got that pullback, was because of that. All right? This was a move up to take out any stops. If sellers were going to use these stops to get into a short position, you would have seen more than just a pullback, and you damn sure wouldn't be seeing it go back up again, right? This would have closed red. It would have looked something like this. Boom. That's when sellers are involved. Put in a double bottom down here. Not a pattern trader. But if the bears were in this asset, you think they could take out $89.93. Now you're trading back up to resistance. So my target is that wick high. Once we get above that, it's anybody's guess. Next resistance level is 94.037. So my target isn't resistance. It's just where I know the stops are. That's why it's my target. But there is resistance up there. So first and foremost, got to get this close above. Weekly resistance is right there. So you got some room to move for your weekly. Dailies. Yeah, this would have been the area for the short to happen. You can see that you closed inside of your daily Heath level. What is the rule? You do nothing because there's a pretty good chance you're going up to test what? Daily resistance. Yeah. Doesn't mean it will? No, absolutely not. But you did get a close well above the Heath level. The Heath level would have been the open of that bullish candle. You can see how it worked the last 2 or 3 times it traded up into it. There was your push lower. This thing found support at, you guessed it, right there. That bearish candle. So now you're trading away from it. So there was more demand sitting at $92 and you're trading higher. We will see what happens, but that's my target right there. Will it happen in the next day or two? Probably not. Probably not. You're probably going to see a pullback. You could pull back all the way to 92.738 and I'd still be looking for that expansion from there to there. Doesn't mean it'll happen, guys. I am wrong sometimes, right? Doesn't mean it'll happen. This is what I'm looking for. All right, let's see. Good morning. Who is going to pay for the construction bill? Yeah, China. That's who. It's going to affect them massively. It's going to hurt a lot of industry in China because if they're essentially builders, right? They build buildings, apartments, condos. I don't know where you guys live, but here in Florida, we have acres and acres of land that'll just get bought up 1 week, and then you go back like 3 months later and you'll see 50 houses that we call cookie cutter houses, where they all look similar, a new housing development. That's what that company did. And there's people picketing out front right now and their offices screaming that they want their money back. Some people bought like houses and they're unfinished, like there's skeletons up, basically the shell. The 2x4s is it. The 2x6s and 2x4s are the only thing that's standing, just a skeleton. So yeah, they're done. It's over. It's shut off. So you're going to lose, lumber yards are going to lose business. Nail company, you name it, dude. Anything that goes from the foundation of a house to up, concrete companies. And this will affect other sectors. Absolutely it will. So yeah, it's not going to be good for China. Not going to be good. I don't know if we're going to see anything from it or not, but price will tell us if we are. With what we have looming here in our own government, with everything that's going on here already, like, I'm looking for dollar bid. I was short on the dollar, right? I was short on it because of the spending, the non-stop spending. So fundamentals say if you're going to continue to print dollars and generate more supply, because by printing money and putting that money in the market, you are generating more supply. That's exactly why the dollar fell so hard and drastically, was the stimulus package that came in March to start fixing stuff, start printing. So that's overall why I was bearish on it. But the reason why now my tune has changed is because I'm seeing dollar strength. Why are we seeing dollar strength? We should be seeing dollar weakness from the printing. The overall fundamentals are bearish on the dollar. So the only reason that we're seeing this, I think, is because people are getting ahead of that interest rate hike. I think that they think that they're going to hike rates. And if they do, they want to be in dollar bullish, because it will be bullish for the dollar. And you will see risk assets fall. And you're getting that. Now, it's not a massive fall, guys. This may be a buying opportunity. We never know. Never, ever. But it's good to watch. What's going on here? There we go. So let's take off all the other ones and just put the 50 on, and then just go back and look in time. So basically, since down here, even then, like, look beyond that, all the way back, once March happened, you got back above the 50, pretty good above it. Like, there were some fake out closes below it, but those are exactly that, traps. They're bear traps. There's your proof. Bullish trade right up, next pullback into the 50. Here, buying opportunity. Here was the first time that it might have not been, but just as soon as you got back above it, you're looking for entries, not off of the moving average, off of the supports, right? You just let this guide you. Here, there's support, next support's here. You can see how price traded down into that. Boom, straight up. This here traded a little bit into what we would have been looking for bullish entries, but the next day we would have been looking for bullish entries from there on out, because this was a trap. This day proves it, right? Big strong move the very next day, traded back down into the 50, or this bearish or bullish Heath level, traded up. So you could be again setting up a bear trap. Absolutely. This is nothing major. So we will keep an eye on it. I will keep an eye on it, guys. I'm not going to, I'm losing something here. How long have we been going? 43 minutes. So we're good. I didn't record this one because it started out good. Let's put the rest of them on and let's see what we can do here. Oh, sorry. I went settings. I like to watch these four, the 100, 200, 21, 50, just because. So, like, I guess you could say, to be on the safe side, if you get below this 100, then you would have had taken out this swing low right here and possibly this one. So at that point, I would probably be then looking for a push up, and then I'd probably be looking for shorts. That's if we got down here. Now, it looks like a big move, and it looks like you will have missed a massive short. You're going to miss moves. You're going to. We like to take those high probable ones, the best ones. So we let price set up for us. And then still, getting down to the 100 could be another buying opportunity. We'll see. We'll know more for the hikes. If they hike rates, we're gonna see some selling come on. If they keep it the same, this will be a buying opportunity. And that's going to be this week. All right, this week. So we'll know. We will know. Right now, it's basically at a turning point. So you can see how all of these markets are situated like they're looking for risk off. Let's go over here. Aussie Swiss had a big day. Come back out of here, but look how much it traded off. That's a lot in what was a very bullish asset. Right? So from all the way down to here, up to here in the span of almost a year, exactly a year, now you're seeing a pullback. So this is profit taking and some maybe inherent risk they see on the horizon. So now people are going to be bullish because you're back above the 50. But the only reason you're back above the 50 is because of this momentum. So don't let that fool you. You're still not structured bullish on. You'd have to get all the way up here and then come back in for a retest before I would be looking for longs. Right now, this looks like it can still be a short. So let's get rid of the indicators and watch levels. This is going to be our first level to watch, 0.6972, because that's resistance. We can get rid of that, put it down there. That's support. So this is going to be our starting off the week's range for this asset. There are stops sitting above here. So will they go up and take those out? I don't know. We'll see. But I'm just saying, like, a lot of these things look like you're starting to see. Look at the Aussie yen. Put in this here. Traded up above this swing high, which is good, right? You're starting to look for bullish entries. Nope. You're trading off again. Now you're finding support at this supply or demand zone. I got those lower ones on there. See here, you're trading into this. So this is possible support. If they're going to keep interest rates the same, they're not going to raise them, then this is probably going to be a good thing to look for longs. Right? We'll see. We got to wait on that. That's going to be a big announcement. A very big announcement. And then the other thing, we won't know until they get that bill out. Right? We just won't know. You are welcome, my friend. You are welcome. Let's go back over to cryptos real quick, because this one thing is just absolutely flying still. I can't get over this. Everything else is red. You got a couple of things that are blue or green. AVAX, Avalanche, super strong. Just continuing to wreck shorts. Right? I was one of them, right? I was looking for shorts down here. And also on Kusama, I was looking for shorts. Didn't work out. Oh, I think I was looking for shorts here. I know I did capitalize on that move when Litecoin got crushed. Not Litecoin, but was it Litecoin? I can't even remember. Was it Litecoin that the fake Walmart news came out about? Looks like it. Yeah. So that's on the day that I took that short on Kusama. I couldn't take the short on this. It was already well over with by the time I noticed what was going on. So there was no play for me on that. But yeah, man, this thing's just trading sideways. Ain't that just so convenient? Traded all the way up and took out these stops. Man, just so convenient. So yeah. There's pretty big support for that is 176, 167. I don't like Litecoin in general, simply because in the bullish phase it never made a new all-time high. Everything else has. Bitcoin, Ethereum, everything made new all-time highs. Litecoin did not. Did not make new all-time highs. It was about to, and then that happened. I'm not even sure what happened here other than the Chinese banning Bitcoin. So I guess if you guys don't have any questions, I'll sit around for a little bit and see if you got any. It's a pretty slow day. There wasn't nothing to talk about. Bitcoin doesn't look bad. Remember, I don't think that this is bad for Bitcoin. We are watching daily support. That's going to happen at 8 hours from now. As long as you're closing above $47,269, I'm looking for higher prices. All right, this is a bullish candle. That took out resistance. And until you take out support, you have to be led by that. Right? You've got to be led by this. Now, if you take out support today and close below it, then this will be a trap. And then you will probably be looking for shorts. But it looks good. It still looks good to me. I think you're going to see a breakout. I don't know when, but probably around the Fed interest rate decision. Probably around then. All right, nobody's got anything else to say. I guess I'll go ahead and cut her down. You guys have a fantastic day. Always, always trade safe, trade smart. Happy trading. If you need anything or any questions about anything, just drop them in the comments. I always, always respond to you guys, especially. Thank you so much for your support. It really means everything to me. You guys are the reason that I keep doing it. So thank you. You all have a fantastic day. We'll see higher prices on Bitcoin probably as long as the interest rates come out good. Talk to you later.